The broadcast is now starting. All attendees are in listen-only mode.
Hello, good afternoon, everyone, and welcome. First of all, on behalf of Lioron, Mr. Mike Turner, and myself, I want to thank everyone for joining us on today's webinar. As you all know, we will be discussing today on IPSAS, the core concepts and implementation strategies, also the challenges that we're facing. Mr. Mike Turner will be the expert trainer. He is actually our trainer who has been delivering our courses on IFRS and IPSAS throughout the years of our mutual cooperation. So as the COVID-19 pandemic has led the governments to deploy significant interventions to support individuals, businesses, the monetary system, and specific sectors as the healthcare. In view of the unprecedented scale of these interventions, there is an urgent need to understand their full current and ongoing impacts of the public finances. This is why we have scheduled the IPSAS webinar. We are really glad that you're all here with us today. There is question sections in which you can, of course, have all your questions. However, the first hour, the trainer will be discussing on the topic, and the second hour will be Q&A session. That's when I will be reading the questions to the trainer, and Mr. Mike, he will be answering all of them. At the end of the webinar, all attendees will receive a certificate from Lioron for attendance. Thank you very much, everyone, once again. I wish you a pleasant and successful webinar ahead. Mike, I leave the floor to you now.
Great. Good evening, everybody. So my name is Mike Turner. I'm a little bit about myself. I'm a US CPA and a UK Chartered Accountant, as well as a CFA, Certified Financial Analyst. And I've been working in IPSAS for about 15 years. I was very involved with NATO, the North Atlantic Treaty Organization, when they moved to IPSAS. I also wrote the implementation plan for Ghana, and I've had a number of other projects. So I have quite a lot of experience, and I'm going to try to give you in this webinar today the flavor of what is involved to move to IPSAS. Now, IPSAS is simply trying to make governments account for things the same way that business does. Now, historically, governments used simple cash accounting. They would book an expense when they paid the money, and they would book the income when the cash came in. Now, for those of you who have experience in the private sector, obviously we know in the private sector we don't do that. We book expenses not when we pay them, but when they're incurred. And we book income when it's earned. So trying to get the public sector to change to the same systems as the private sector is basically what IPSAS wants to do. Now, there are a lot of challenges. And in this next hour, hour and a half, I want to give you some of my experience of that, and then we'll open up the floor to questions. So on your screen there, there's a question box. So as I'm talking, you can type the questions in there, but Mimi will read me the questions when I come to pause it. So I might finish a certain section, and I will pause and I'll say, Mimi, are there any questions for this section? I'll have Mimi read the questions in case I get too many so she can group the questions, because sometimes they're very similar. So I hope you'll learn a lot from this session. I have a lot of experience in this, and it's a pretty interesting topic. So when we talk about international public sector accounting standards, I'm just going to move this box here. So move this down. So we talk about international public sector accounting standards. It's basically the same that we do in the government, in the private sector. So what are the issues? Well, if we look at the public sector in Europe, debt levels have increased. especially with this COVID coronavirus, governments have taken on a large amount of debt. This deficit is not sustainable. And what we really need to do is to come up with an accounting system to make sure that we have our finger on the numbers. And it might seem obvious, but a lot of times in government, we don't show all the liabilities. There's a lot of stuff that is off balance sheet. When you talk about the corporate sector, the same doesn't happen. Because in the corporate sector, we've used the concept of accrual accounting for years. So what we're trying to do is to get governments to do things the way the private sector does. A couple interesting facts. In the last 100 years, Greece has gone bankrupt 9 times. I believe part of that is because Greece did not have a very transparent system. So people in Greece, their citizens, didn't really understand how bad it was. We're at a point in our time where if you have children, when you die, your kids are going to get more liabilities than assets because the governments are leaving so much debt to the next generation. So when you retire, your children have to pay for this. So there's a lot of things we would like to get our hands on so at least we can understand what is the reality. It was interesting, there's been some positive things. When IPSAS was adopted in Switzerland, because one of the objectives of IPSAS is to track our assets and liabilities. And Switzerland found 100,000 assets, pieces of property that they didn't have a centralized system for. There were empty buildings, land that they could have either sold, rented, or found a better use. There was also an example in London where there was some property that was in central London that, of course, the ministry that had it might have known about it, but it wasn't known in a centralized way. And it was some very expensive property that they were able to rent out and bring in income to the government. There are a lot of benefits. All IPSAS is saying is let's get a system of accountability. And who do we want to be accountable to? Our citizens. So this is the global trend now, to get accountability to our citizens. And the countries that are accountable, we find, are the ones that are the most well-run. Probably the country right now that is least accountable is North Korea. That's run by, obviously, a very strong dictatorship. And when you take the opposite of that, probably some of the, Latvia, Lithuania, those places, I think it's Latvia, sorry, you'll find when they move to IPSAS, the government's very transparent, and the citizens in those countries have a much higher standard of living than those countries that are not transparent. So the idea about increased transparency is to give information to the outside world. So we have information for the parliamentarians, those that make decisions, and we also have information for the general public. And the idea is the information for the general public is our citizens can understand what we do with their money. And this is going to probably make governments more accountable and gives better information on how we run those organizations, run those government entities. So if you worked in the private sector, it's kind of obvious, but what we're trying to do is we're simply trying to show our assets. Let's move this over here. So what does the government have? These are our resources. So if we're a hospital, we have beds, we have, in the day of COVID, ventilators. These are our assets. And we want to say, okay, how do we use these assets for our citizens? If we have a lot of vacant land or empty buildings, is that the best use for our citizens? Now, maybe not. Now, maybe some of that buildings could be rented and give income to be used for our citizens. So we're trying to say, what are our assets? How are they being utilized? And then the other side is, what are our liabilities? And who do we owe money to? Because what oftentimes happens is we have a lot of liabilities that are hidden. And IPSAS makes us take those liabilities that are hidden and makes them more transparent. Sometimes it's quite nerve-wracking because you all of a sudden look very unhealthy. But I always say it's better to know the reality. It's like if somebody has cancer and they never go and get checked, they're fine until they just die. But if you get checked and you know you're unhealthy, you can do treatment to have a better life. It's kind of the same thing about IPSAS. What we want to do is understand what is our reality. We look at the revenue and the expenses to see what's left over, our surplus or deficit. Now, when we do this, it's important that we include things we haven't yet paid for. There was an interesting example about Australia. This was a few years ago. So Australia, if you go back to 2002, 2003, they said we had a surplus of $2.1 billion. That was 0.3% of GDP. So if I'm an Australian citizen, I say, that's great. Our tax money is more than our expenses. Therefore, we should be able to provide more services to our people. If you change to an accrual system where you also include expenses that you haven't yet paid for, that surplus went from 2.1 billion down to 0.2 billion. That's a very big difference. If you remember what happened in the GCC region about 2 or 3 years ago, when oil prices had a rapid decrease, there was concern in the GCC region in Saudi Arabia, in Oman, in a number of countries, that they wanted to conserve their money. So what happened is, if you were in the construction business, take, for example, Bin Laden. I'm talking about Bin Laden, the construction company. And that's a very large company in Saudi Arabia in that industry. And what happened with those companies is they did a lot of work for the government, building mosque and infrastructure projects. And the government extended their payment time frame. So if I did work for the government in the GCC region, I should have got paid within, say, 60 days. What happened is they extended the payments to sometimes 12 to 18 months. Now, why did they do that? If I use cash account and say, well, here's my cash receipts, here's my cash payments, I'm not so bad. But the way they did that is they just didn't make some of the payments. So if they had used a system of IPSAS accrual accounting, what you would find is, even if you don't make the payments, you still show that. It still shows in your deficits. So when they went to the ruling people in the GCC region, they would say, oh, it's not so bad, we have a little bit of a surplus. Well done. No. The reason why you have a surplus is you didn't pay all your bills. Those numbers are not fully transparent. So what IPSAS is trying to do is to say, let's book our expenses when we get the benefit. So if I use the internet, right now I'm in India. I have an office here with 150 people. So if I use the internet in the month of July, whether I pay it or not, I show an expense for the internet. And that's what we're really trying to do. So in cash accounting, we take revenue less expenses, what you paid. In accrual accounting, you take revenue less expenses and the change in the assets. So sometimes you make investments. You might buy some more cars, some more ambulances. In this day and age, you might buy some more ventilators for the COVID situation, or you might get some more hospital beds. Those are assets. Those are not expenses. So what we're doing with accrual accounting is trying to look at the changes. How do the assets change? How do the liabilities change? And understand how it's going. So it sounds easy conceptually, but it's not. I've done commercial accounting for many years. And what happened was in 2003, 2004, NATO said, Mike, we really like how you work with governments, with private sector, IFRS. Come and teach us. It's the same thing. Well, that was about almost 20 years ago. I said, sure, no big deal. And the first work I did in IPSAS was a disaster. Because in the government sector, it's completely different. For example, one of the concepts in the private sector is an asset is something you control. Well, hold on. This building here, this school that I'm at, well, it was paid for by someone else. Okay, whose balance sheet does it go on? So there are a lot of issues with IPSAS. So in this webinar here, I want to give you a flavor. I have a significant expertise in this area. But the key thing is transparency is good for your country. If I take Chile and Argentina, Chile was a very poor country compared to Argentina in South America. But Chile was very transparent. They were an open book. And Argentina was more secret. Because Chile was more open, they were able to borrow money from the international lenders at an interest rate that was half the same interest rate as Argentina. So if I'm going to lend money to Argentina, I'm nervous because it's all a secret. How bad is it? I don't really know. But if I lend money to Chile, at least they're honest. If I lend money to North Korea, I don't know. It's a black box. But if I lend money to, say, Scandinavia, which is very transparent, I'm more comfortable. So transparency makes it easier for countries to borrow. In the GCC region, we're trying to move away from the reliance on oil. I don't have a crystal ball to say what's going to happen to oil. But over time, I would imagine we'll change from fossil fuels to other fuels. It's important for the governments in the GCC region to understand what assets they have, to borrow, to set up new projects, to diversify their economy. So accrual accounting is very, very important for them. So what is IPSAS? IPSAS stands for the International Public Sector Accounting Standards. Now, there are two broad types of standards. There are standards for the private sector, and there are standards for the public sector. The private sector uses IFRS, International Financial Reporting Standards. In the Kingdom of Saudi Arabia, these have been applied since 2016. Personally, I get my years all mixed up now. I think it was 2016. I was personally involved in the SABIC implementation of IFRS. So IFRS is for companies, they may be owned by the government, but they're businesses. So SABIC, they buy materials, gases from Aramco. They convert those gases into petrochemicals and they sell it. So when you're a business, you use IFRS because it doesn't matter if it's owned by the government, but it's a commercial activity. Let's say I'm the Saudi, I'm the Minister of Health or Education. And my objective is to educate the citizens of our country and to use the taxpayer money for that. So IPSAS is designed for organizations that don't have a commercial purpose. So if I provide the police, I don't go and, of course you get tickets if you do something wrong and the money goes to the police, but the police uses taxpayer money to have protection on the roads, to make sure our borders are safe, to help monitor and make sure we don't have crime. And they don't make a commercial profit. So the idea of IPSAS is for those organizations that don't have a revenue for what they do. The revenue comes from the taxpayers. And that's why we have IPSAS. So the idea of IPSAS is to provide information so we're accountable. So we give money to the police, the fire, the military, or education. We can understand what they did with that money. And to help us as citizens, when we vote, or our legislators or our people that are in power, to make decisions on how that money should be used for our country. A lot of organizations use IPSAS. I personally was very involved with NATO, the North Atlantic Treaty Organization. It's used in the European Union, the Space Agency, a number of organizations. I'll be honest with you, it's not smooth. A lot of times we apply IPSAS for the first time. We sometimes do things in a way that doesn't make any sense. It's going to take time. But when we get it right, and we're able to have numbers to manage our business, we'll have to be in a lot better situation. So what are IPSAS? They're basically high quality standards for the public entities. But you may have a public entity that uses IFRS. Why? They're commercial. For example, Aramco used to be owned only by the government of Saudi Arabia, but it's commercial. So public sector entities are things like national governments, regional governments, local governments. They're not commercial entities. And what IPSAS is about is saying, here's a framework to provide a set of financial statements we can show our citizens how we spend their money. So IPSAS is all about accountability to our citizens. IPSAS allows our creditors, so if we're say Yemen has a lot of financial challenges. And if Yemen wants to borrow money from the international community, IPSAS would allow the international community to understand their financial situation. Of course, they may get some donations from some countries, and they may get some loans from others or from commercial entities. So IPSAS is designed to give general purpose financial statements. What does that mean? Well, general purpose financial statements is like a statement of position, a balance sheet, a statement of financial performance to show the income and expenses. The cash in, cash out, we call it a cash flow statement. How our assets go up and down, a change in net assets or equity. It also has us, which we don't have in the private sector, compare our budget. Because one of the differences in the government sector is we prepare budgets and we publish them, and then we act on those. And we want to show to the public, here's what we said we would do, here's what we did. So budget accounting doesn't exist in IFRS to be given to outsiders, but it does exist in IPSAS. IPSAS has a lot of positive impacts. We recognize and value our assets and liabilities. As I mentioned to you, Switzerland, the UK, a number of countries have said, why do I have to have this expensive office building in London that's worth millions and millions and millions of pounds to house an admin service that can be done in a cheaper location outside, when we could actually rent that out and use that money in a more efficient manner? Or sometimes you have buildings in the center of London that were just very underutilized, a lot of empty space. If you're a private sector organization, you would not keep a building empty in London because the rent there is so expensive. You would find a use. It helps us make better decisions. We have numbers, we can challenge things. We try to do things in uniformity. So in a country like I've worked with, what you would want like in Ghana or in the UK or different countries is every place in your country to do things the same way so you can compare. In other words, what we do in Riyadh, we would want the same thing to be done in Jeddah. We wouldn't want different countries to do different things. International development, especially for emerging countries like Yemen or poor African countries, it helps them give comfort to the donors to get more money. Saudi Arabia is very generous to helping other countries that are less privileged. And when you give money to other countries, you want to know what's their financial strength. Show me your reality. The more honest you are, the more transparent, it's easier for me to help you because I understand what are your genuine needs. There's a big long-term impact because we start thinking about accountability. Just like in the private sector, it changes the behavior of politicians. Because what we're doing is we're letting the public know, how was your money spent? And in some countries, especially Scandinavia is a classic situation, the people can speak up and say what they want. By the way, if you do have any questions, Mimi's advised me there's none yet, but if you do have any questions, please just type them in the question box, and Mimi, when you feel it's appropriate, you can interrupt me. So any questions, just please type them in. What's the challenge of IPSAS? To be honest, my personal experience, the biggest challenge is your IT system. That depends. There are some governments that have great IT systems, but a lot of times they're not designed to give the information in this structure. Look, if you work in the government and for the last 30, 40 years, you've done things a certain way, as an expression in English, as we say, it's very difficult to teach an old dog new tricks. So the problem is a lot of these systems don't give the information that we need to be able to come up with impactful numbers that we can use in an IPSAS format. So we oftentimes have to restructure the organizations, the processes. There's a lot of change management. We're just saying, let's make things accountable. I mean, I'm not trying to be negative, but if you compare government sector to private sector, I think you would agree, usually the people who work for governments take longer breaks, or you inline at customers something on their phone doing something, where in private companies they're being pushed. I mean, Amazon tracks their employees with a GPS device to say how many packages do you move per minute. I wish that when I went through customs line in different countries around the world, that those customs officers were tracked the same, so I'd have to stay as long. So we know that the government isn't generally as probably push as the private sector. So what we're trying to do is say, well, how can we make us more accountable, and how can we move towards having some of that? There's an emphasis on accountability, not you just spend money and it goes into this mysterious black box, as we say. There's a lot of political dimensions as well. We start to look at things like, instead of budgeting on a cash basis, budget on an accrual basis. If I buy a fire engine, that fire engine is going to be good with me for the next 20 years. That's different than if I throw a neighborhood party, or if I throw a festival where the money is gone. So accrual budgeting says, yeah, if you spend $300,000 on a fire truck, and it's good, say, for 20 years, that's like $15,000 each year for the next 20 years. But if I spend $300,000 on a party or publicity or school for this year, I got to spend the money next year again. So we're trying to say, well, let's try and focus from a political point of view on what we consumed, not spent. And then we also try and talk about performance. it's not just about spending money on education, it's about being effective. So traditionally in government accounting, we had cash accounting historically. We would record items when they're spent, and when they're not spent, they're not recorded. Then we had commitment accounting, where a lot of governments will record things when you issued the purchase order. It's sometimes known as encumbrance accounting or invoice matching. But IPSAS is trying to move to accrual accounting to match the expenses when we get the benefit and to match the income when we earn it. So where we're going around the globe is current policies in a lot of jurisdictions are much more cash-based. We're trying to move to then, IPSAS has a set of cash-based standards, but those are designed for a transition. The real objective is to get companies to use accrual. And accrual is really where we want to go. So IPSAS, what they've done is they said, well, let's take whatever is done in the private sector, copy, paste. But sometimes that doesn't work. Let's take revenue, for example. Well, if I go to McDonald's, I give them money, I get a burger, I exchange. So in the commercial sector, you pay and you get, we call that an exchange transaction. Now in government says, Mike, you made $100. We're going to take 20%. Well, what do I get? Well, if you're a rich person and you pay 20% of $1 million, 200,000 real, and you're a poor person and you pay 20% of 10,000, 2,000, the more you pay doesn't mean the more you get. So IPSAS says, well, we have some types of transactions where what you get and what you receive don't equal, so we call those transactions non-exchange. Now, in the private sector, that doesn't happen. Of course, we make donations and so forth, but the majority of our transactions are money in, I gave you something. So IPSAS, this is an example. IPSAS said, okay, you have one standard in revenue we can copy from the IFRS people when you exchange stuff, but what about stuff that's not exchanged, like taxes? So what IPSAS did is they came up with specific standards that had issues that are only made sense to the government. Or what they would sometimes do is take the commercial standards and just change them a bit because it didn't really work. So we would just change them. Now, there's been a lot of lessons, so hopefully you can I'll type in your questions and then I'll go through them. A lot of lessons. Yes,
sorry for interrupting. There is a question. So, if 100% government-owned entity has got main activity as non-commercial, so 90% of resources, however, there is an activity to do commercial transactions, 10% of resources, should it apply IPSAS or IFRS? The financing for both commercial and non-commercial activities come from government. However, whatever revenue you generate, entity cannot use it, rather those are given back to government.
All right, that's a very good question. Let me give you some examples here. I did some work with Abu Dhabi. And Abu Dhabi has a number of companies that are owned by the government. Some of those companies have a commercial objective and some of those do not. So if I'm the water company and I charge people for their water, and my business objective as the water company is to get at least back to recover my costs or make some profit, then I would use IFRS. So IFRS is for any government organization that gets their money back by users paying with an exchange transaction. So if it's an exchange transaction, it's IPSAS. Now, if it's not an exchange transaction, and the government doesn't get back, then it would be, sorry, if it's an exchange transaction, it's IFRS. If it's not an exchange transaction, it'd be IPSAS. Now, here's an interesting example that I had a lot of debates with. If you take Formula One in Abu Dhabi, now most people would say Formula One is a business. And in most countries it is. But is Formula One a business to Abu Dhabi? Well, if you look at the numbers, they spend a huge amount of money. The fees they get are not going to get their money back, in my opinion. Why did Abu Dhabi spend so much money on Formula One? Well, in my opinion, as a government, by having an asset there like Formula One, you bring people into your country, there's a benefit of them using hotels and other aspects. So sometimes the government will spend money. They don't expect to get the money back on that thing, but there's other benefits for their country. So you could argue that Formula One in Abu Dhabi is not a business, it's a government entity. You should use IPSAS. So this was a very interesting case that I do in some of my live classes, because if you took Formula One in Abu Dhabi and you took the investment amount, no private sector company would ever make that investment. The numbers didn't make any sense. But the government of Abu Dhabi said, listen, for us it makes sense because our problem is everybody goes to Dubai. We want Abu Dhabi to have something special as well. So to do that, we have to build some things here to bring people also to our place. So this is a very difficult question. But generally, if you get your money back by charging users a fee for what you've done, you use IFRS. If you just get money from the government to provide services, you use IPSAS. When you have mixtures of both, it requires more analysis. It's very difficult to answer. As I always say when I do my consulting work, the devil is in the details. Let me give you some examples about the private sector. You take bridges. So a lot of governments in Europe had huge debts, and they said, we don't have money to build the bridge. So what we could do is have a private company build the bridge, and when people use the bridge, they pay a fee, a toll. So then what we're saying is, well, is that really a liability of the government? Well, it depends. If I build a bridge and I say you can operate this bridge for the next 30 years, and every time someone drives across the bridge, you get 5 real and you keep it. Well, from the government's point of view, I've taken on no risk. And if I've taken on no risk, I should book no liabilities. There was a situation in Greece where they built these bridges or built these roads, and the government said, well, we're going to guarantee you a minimum amount. And what happened is the minimum amount never happened. So in that case, if you build infrastructure and you're going to guarantee it, maybe you should show that as your liability. So we've looked at things in the private sector to try and show more physical responsibility. The one that really hurt or really hit hard was pensions. Now, in the United States, in the European Union, the UK, historically in the private sector, if you go back to the 60s and 70s, my grandfather, my dad, with them, they would get a pension based on their last salary, and that pension would go until the rest of their life. The problem is, take my grandpa. When my grandpa started working, my grandpa was born in 1912 and he passed away about 5-6 years, 10 years ago. So when my grandpa started working, they didn't think my grandpa lived to be 95 years old. So when my grandpa got a pension, they thought, he's 30 years old. Look, sir, when you retire, we'll give you your salary. They were thinking on the calculations, well, you'll probably be dead at 70. We'll give you money for 10 years, and then boom. Well, because my grandfather lived to be 95, they had to give him so much money for so many years that they didn't expect. And that made governments have a lot of financial problems. Now, in the private sector, what we've done is we've changed pension plans. In the private sector, what we've done is we said, you're going to no longer have a defined benefit plan where you get your last salary for the rest of your life. We'll put money aside. For example, I would take your salary. So in India here in my company, I would take your salary, I'd take 10% of your salary and put it into an investment account. If the investment goes big or small, whatever happens, that's your money when you retire. So when we looked at accrual accounting, governments started to say, oh my God, these pensions are so expensive. So in the private sector, we just stopped them. They did, like in the UK, if you were a policeman, you used to have to work 40 years to get your full pension. So if you worked 40 years, you would say, well, 40 years over, so in the old system, you would say 40 years. So if you worked 40 years, you would get 100% of your final salary. Because they did IPSAS, they did accrual accounting, said, gosh, this is really expensive. So what they did is they changed this bottom number, they changed it to 80. So now if you work 40 years, you only get half of your final salary. If you work 20 years, you get 25% of your last salary. So what they're trying to do is balance and say, we can't keep paying these big pensions. Why did this happen? This happened because of IPSAS. Because when we did accrual accounting, we realized we just simply cannot afford it. IPSAS gives much better information from a management point of view. So it puts us in a position where we're able to understand the performance. Now, government employees historically don't like to be monitored for productivity. Here in my office in India, I monitor the phone calls they make. I monitor how long they take between calls, a lot of data here. IPSAS is trying to get governments to move into the direction we do in the private sector to get data, productivity. It's a very different mindset. And because of this different mindset, it's going to take years and years for this to happen. So what we found when we worked with IPSAS around the world is the solution is you need people that have private experience from the commercial sector. You need people with government experience. You need to put them together to get IPSAS to work. IPSAS is not easy. Implementation issues. Mimi, any more questions up till now?
There is a question. Based on experience, on average, how long does it take governments to implement accrual-based accounting system, considering developing the IT system as well?
Great question. If you could wait for 3 slides from now, I have a slide on that. Any other questions?
Yes, one more. How does consolidation work if one government company opts IPSAS and another one IFRS? Or do everyone in group have to opt for IPSAS or IFRS?
It makes it more messy, but governments, you could still consolidate both of them together. So it's called the WGA, the whole of government accounts. So if you take Abu Dhabi as a government, they have commercial, they have non-commercial. You can still put them all together. It's a more messy consolidation, but you can still do it. What you could do is you could look at some countries like New Zealand, some of the UK. look at their financial statements to give you an idea, but you can still consolidate them. Revenue from exchange transactions, revenue from non-exchange transactions, and you'd have notes to break it down just like you do. So it's, look, IPSAS and IFRS, it's interesting. When I was working for NATO, we had all of these debates. Should this organization use IPSAS or IFRS? Oh, we're commercial driven. The outcome between IPSAS and IFRS is almost the same. IPSAS has more guidance on areas that you don't have in IFRS. So it's not really, doesn't really matter which one you choose, but you'll find that IPSAS doesn't, sorry, IFRS doesn't work if you have tax income, because IPSAS covers how to recognize revenue for transactions where you don't exchange. So IPSAS and IFRS, as I said to you, IPSAS standards are copy, paste from IFRS. And then we make changes where it doesn't make sense. Now, there can be situations where IFRS has new standards and IPSAS says you can use those standards later. There could be some timing differences. Like the new revenue standard in IFRS has been around for a couple of years, but IPSAS, it'll probably come around in 2 or 3 years from now. So those are some details that we can solve, but it's not a problem to consolidate IPSAS and non-IFRS and IFRS. The government could have a hospital which provides free medical to my poor people. The government could have an oil company which makes us money, and you could still consolidate them. It's just all in how you do the notes and explain it. Were there any more questions there, Mimi?
That's it for now.
Okay, great. So, and I'll get back to the other question in 2 slides from now. So IPSAS is a change in mindset. So generally as governments, we would say, cash, I spend, where's my bank balance? We now move to this concept of accrual accounting. I don't care when I spend it, it's what did I agree to spend, not when I paid the bill. We go from monitoring budget spending to say, okay, what resources do we have? These are our assets. We have these fire trucks, these schools, and these liabilities. So it's a change of mindset. The reporting requirements change. We go from budget accounting, sometimes I find budget accounting very cynical. It's like every September we get the budget approved and we spend the money and that's it. The focus now is more like, well, general purpose financial statements, not budget accounting, but what are our assets? What are our liabilities? Not when you got them. There's a shift from cash flow and treasury reserve accounting to the whole of government accounts to say, okay, as a government, what do we have? So in Saudi Arabia, if we did whole of government accounts, we'd say, well, we have Aramco, we have SABIC. Those are 2 large assets of the government. They have substantial shares. We have these other areas we're trying to build the new, what do you call it? The new fund zone, maybe an IT park. And we have other assets, which is to help our citizens like schools and fire department, police department. The idea is to move to a situation to say, here's where we are as a government. Now, some governments have a lot of assets to make money to support other parts of the government, such as Saudi Arabia. A lot of the money that the government gets in Saudi Arabia comes from Aramco, from the oil business. Other countries don't have that. They get the money from taxes. So it's a change in mindset. Now, when it comes to time, Canada, New Zealand, South Africa. Canada took 14 years, and Canada said it was $600 million. Now, Canada is a very, land-wise, it's a big country, but people-wise, it's a teeny place. The U.S. is 300 million people. Canada is a fraction of the U.S. So it's a very small place. They spent $600 million for their system. New Zealand. In New Zealand, there is more sheep than people, right? That's what they're known for. Now, New Zealand is highly educated. They have a very strong accounting profession there. They only have 3 million people. I mean, 3 million people is probably, where I live in Pune, India, I live in a very small city of 9 million. So New Zealand is 1/3 of the size of the small city I live in India. So in New Zealand, it took them 6 years, $300 million. South Africa is probably a little bit more disorganized. I used to live there in the 90s. I worked there for Deloitte. It took them 13 plus years and still not done correctly. And they didn't keep track of what they spent. We don't really know. So it's a big process. And what I always tell people that work with this, it's the direction of travel. Don't try and get perfect information tomorrow, because you won't. Are we getting better? Can we start making better decisions? And as the years go by, and we can make better decisions as the years go by, we move in that right direction. So it's a long time. Some countries go to full accrual. So Canada did accrual accounting, but cash budgeting. New Zealand is a superstar. Accrual accounting and accrual budgeting. In other words, you budget the same way as your accounting system. So you could do accrual budgeting or cash budgeting. You could do accrual accounting or cash accounting. You have a mix of two separate things. South Africa did accrual accounting and cash budgeting. So this is what you want, but this is really difficult. But New Zealand has a super high skill set, a very small population, very organized. South Africa has a wide range of skill sets. South Africa is very, very third world and very first world. It's a wide range. So for them to adopt accrual accounting and accrual budgeting is much more difficult. The benefits. As I always say, my business partner in India always tells me, Mike, no measure, no management. So I was sitting with my manager yesterday, I said, what's our output? What's the goal? What's the difference? If I don't measure my managers or my teams, I'm not managing them. What's good, what's bad? How many phone calls did you make today? Well, how many phone calls should you make? How many you're doing settlements, how much money should you bring in? So
sorry for interrupting, Mike.
Go ahead.
I have a question for the previous slide. That's why I had to interrupt. I believe you mentioned shortly, but I will still read the question. What could be the reason of Canada and South Africa taking longer time than New Zealand?
New Zealand is a very small population of 3 million people, and they have a very strong accounting profession. So globally, if you hire a chartered accountant from New Zealand, they're considered to be AAA. Canada has a more diverse population, and it's a much, much larger population. It's 10 times the size. So the reason why New Zealand was able to do quicker is it's just small. Canada and South Africa are larger and similar in size. And that's why they take longer. South Africa is also third world and first world. Canada is just first world. The UK also took 14 years as well. So it also takes the commitment of the country. It's not just, I mean, I work in Ghana and we have these meetings. Oh, we commit to do this. I come back a month later, oh, Mike, we were busy, nothing happened. Well, it's not just what you say, it's what you do. It's the choice of your government to say, are we serious or do we pretend to be serious? So New Zealand was serious. They were committed. I think the other countries didn't have that same level of commitment. I keep getting these countries. I think Latvia, very committed, very committed. Other countries, not as much. It's commitment. So the benefit is of IPSAS, no measure, no management. What's our debt? Right now with COVID, countries are borrowing like crazy. It scares me for the future. I understand we need to help people out. But in the United States, I was very disappointed. People did not want to go back to work because the government benefits were so much. Now, I have a business in India. And what happened for me is because people didn't want to go back to work, people called me and say, hey, Mike, help us out. I can't get anybody to answer my phones. So what happens? We do it in India. Now when those people want to go back to work, the boss says, I'm sorry, I already gave the work to Mike. So when countries like the United States give so much money from tax dollars, they borrow, they got to give that money back. So we have to understand what are the liabilities. And one of the things that scares me is if we keep spending so much, how do we pay it back? We find assets. I mean, there's been a lot of countries, of course, you know your assets at a lower level, but all of a sudden say, well, why do we have this big building in Riyadh only for 100 people that's super expensive when it could have 500 people? Why did that department get special treatment? Just because they had it for a long time? So you start to try and challenge things. You start to try and challenge things. More efficient service delivery. We don't try and, I've seen it so many times in training. Mimi could probably talk about this. So people say to Mimi, hey Mimi, I need a course in January next year, but I have to pay you this year to put in this year's budget. So people try and cook the system. Oh no, Mimi, I can do the course in December, but please, Mimi, issue me the invoice in January because I have no more budget this year. So this is creative accounting. So one of the things that IPSAS does is put the expense when we get the benefit, and it takes away this trying to shift things around. We try to look at the non-cash costs as well. Better resource distributions, resource distribution, resource allocation. Why does this building have 100 people that is super expensive, but this building has 300, it's cheaper, but it's more important? So at the top, I see reports with numbers. Hold on, 1,000 people in this crappy old building, and it's so important, and this other building has so few people. So you start to say, maybe we should change it and say, give them some of that space. In government, if I am in charge of a department, I'm not going to go to the government and say, hey, listen, guys, I've got extra space. Do you want to rent it out? I'm not going to do that. Oh, I have a nice big office because I'm important. So what it does is it starts to challenge things. It helps us get more uniformity. We optimize our investments. We make better decisions. This is a slide I put on when I do a lot of IPSAS work. I find that a lot of the IPSAS consultants say the craziest things. And my biggest advice is when you do decide to adopt IPSAS, make sure your consultants are not academics. I worked with some academics, and they suggest things. You say, you should be a professor. I'm a businessman. I have 150 people in India, businesses interests in Romania. I make things happen. When you work with people like myself, consultants like myself, we want results. When you work with, say, a professor, they sometimes have these wonderful theories. And you go, oh my God, just please be quiet. I mean, I always remember there was a professor that was working with NATO, it's a long time ago. And we were talking about assets being things you control. So there is something called the Sixth Fleet. So off the coast of Italy, there's a bunch of ships that are US naval ships. And they're deployed as the NATO defense mechanism of Europe. Now, the question is, who controls those? Well, from the military exercise point of view, of course, the control of those ships is with NATO. So this consultant, this professor said, well, that's a NATO asset. I go, hold on. If there's a war, the only person that can order those ships to bomb an enemy is the US president. The real control, the button is with the US president. So the real control is with the US. So therefore, those are US assets. We just put them over there to practice. When it comes to the war, that's different. So in these things, if you come onto one of my courses, I go through a lot of detail. So IPSAS, the way I like to say, when you implement IPSAS, it's all about being practical. If you're too academic, nothing gets done. IPSAS requires extreme practical side. So, are there any more questions there, Mimi?
Yes, Mike, thank you. So I have a question. What does the estimated cost consist of? Systems, capacity building, hardware? Question mark.
Great. I have on my full course, I have a slide on that. It's 60% half can be systems. A lot of it is just training in HR because you have the wrong people. So here's one of the reasons why New Zealand was very successful is they got people from the private sector. So one of the biggest costs is change management. If I'm 50, 60 years old and I've been doing things for the last 30 years, I'm going to be a problem to adopt IPSAS. You want a young kid in there who can do something different. So the costs tend to be systems, but not always. It's just training and changing people, putting processes in place. I mean, having two systems parallel, getting people to understand. So it's a huge AR. But if you look at studies by the World Bank, I think they say statistically 60% of your cost is IT or systems, which is not just the IT. It's the training. It's getting the system in place. So it's the systems, the training of the new systems, understanding when I did this in Ghana, okay, the new system involves what are your needs, getting users to understand how to use the system and the rollout. So systems includes people, software, hardware, all of that is system. If you send me an email, I'll give you my email address at the end. I can always give you some more. If you have any more questions, I can go through this as well. But it's a lot of things, and there are a lot of. I go through that in my course. I don't have all the numbers memorized, but it's generally the systems. Anything else there you have, Mimi?
Yes. Accrual budgeting versus cash budgeting. Can you please tackle the main challenges with accrual budgeting, especially in Abu Dhabi, where the government is still clinging hard to cash accounting?
Okay, well, what is accrual budgeting? So if I buy a fire engine in 2020, cash budgeting says a fire engine costs 300,000, no, that's dollars. A fire engine costs about $1 million dirham. So in cash budgeting, I say in 2020, I budget $1 million dirham to buy a fire truck. Done. In accrual budgeting, I say I'm going to consume 5 million dirham of fire trucks. That means the depreciation or the consumption equals 5 million. So in accrual budgeting, you don't budget the cash expenditure. You budget, if the fire truck's good for 10 years, you would say, take 1/10 of that. So to do accrual budgeting, you're looking at your old assets you're going to consume this year, plus the new assets you consume this year. So it's much more complicated. Whereas with cash budgeting, you don't budget for the fire truck you bought last year. The only thing you're going to budget for last year's fire truck is the oil change this year or the maintenance. So accrual budgeting is saying, what am I going to use of the assets I bought last year? So it's a completely different animal. It's much more complicated. You're budgeting your depreciation. Your depreciation is your consumption. And to do that, it's not so easy. So what I recommend, look, if you're New Zealand, small country, super good system in accounting. If you're Lithuania or Latvia, I keep getting the mix. I think it's Lithuania. Or is it Latvia? One of those countries. I got to look again. I get you mixed up. All the time changes. And that small country there, very, very good in IT. They can do it. For most countries, you don't want to do accrual budgeting too quickly because it's so confusing. You mean I got a budget for the asset I bought last year I'm going to use this year? Excuse me, what? Think about it. That's not so easy. So accrual budgeting, I think Abu Dhabi is going to do cash budgeting, I would imagine to be initially, because accrual budgeting is just too much. Does that make sense? Whoever asked that question?
Thank you very much, Mike. If Marwan has further questions, if he needs further clarification, he will approach you. There are other questions, but I suggest we proceed. I will read them later on. I will cover all of them.
Okay. So the UK transition. So I have 3 slides left, and then I'll open up to Mimi for questions. So in the UK, the way we did it there is we first did public corporations. So like the Aramcos and the SABICs. So companies that are owned by the government, they're actually businesses. That's easy. They use the IFRS. Then the next thing we did in the UK was the National Health Service, because it was more organized from an accounting point of view. We then went to the local governments. We did partial accrual accounting in full. And the very last thing we did was the central government, which was very messy. That's just how we did it in the UK. So if I was going to devise a plan for the United Arab Emirates, I would say, okay, let's do our commercial entities. You have a lot of commercial companies there that are, their purpose is to make money like a business. Then I would pick some other ministries that are more organized from an accounting point of view of the data we want. And probably the central government would be last. The most important thing is to be realistic, the time scale. So in the UK, if I used this slide when I was teaching in Mongolia last year, 1994, we said, let's use accrual accounting. So if you were a baby in 1994, in 1996, they adopted the policy. In 1999, they did a dry run. In 2000, their first set of accounts with a lot of mistakes. 2001, the last cash accounts. 2001, 2002, accrual budgeting. 2003, full accrual budgeting. And then in 2009, 15 years later, they took the entire government and they prepare what's called WGA, which stands for Whole of Government, or the consolidated accounts. It took 15 years. And I think where I get frustrated, I work with these emerging countries and they keep saying, we're going to do it quicker, we're really good. No. Come up with a realistic plan, take your time. It is not easy. It is not easy. So I finished my main presentation. I'll write my email here, and Mimi's going to continue to read questions. You also have Mimi's email as well. So you can email me at mickturner@gmail.com, and I'll come back with any questions. And if you have any training needs, Mimi takes care of all of the course scheduling for me. So go ahead, over to you, Mimi. Ask me the remaining questions.
Okay, so there is one question. Can you elaborate more on cash budgeting, please?
Sure. Okay, let me just pull up my screen where I can write on. So let's say I'm the fire department. Okay, and I need a fire truck. If I'm going to do a cash budget, I would say buy one truck, and it's going to be 1 million dirham. So in my cash budget for 2020, I want to spend 1 million dirham. That's my cash budget. If I'm doing accrual budgeting, we would say, okay, so cash budgeting, how much we're going to actually do a wire transfer for. Now, if I do an accrual budget, I'll say, well, how much am I going to consume? So if one truck is 1 million dirham, so if one truck is 1 million dirham, and let's say for simplicity's sake, it's good for 10 years. So each year, it costs me $100,000 per year. So if I need 5 fire trucks, I would say my budget would be 5 trucks times 100,000. So if I'm using accrual budgeting, I would say the budget is 500,000. Now, I'm actually going to spend money, so I'm going to do a bank transfer for $1 million because I'm buying a new truck. But I'm going to consume 500,000. So accrual budgeting is saying, let's budget the consumption, not when we bought it. And so because you buy a truck for $1 million dirham and it lasts for 10 years, you consume 100,000 a year. So with accrual budgeting, every year you're going to budget 100,000. That's your consumption. You don't budget when you buy the truck, you budget as you consume it. Does that make sense? Does that make sense?
Thank you.
Any other questions?
Yes.
Sure.
So
Go ahead.
what is the problem in applying accrual accounting and cash budgeting? Does it have to make like dual ledgers to apply accrual accounting and cash budgeting? I hope makes sense because I'm not really the expert, so I'm not sure if I'm reading right.
That makes sense. Well, the problem is the following. When you go to your decision makers, you make decisions on budget. So internally, if you make decisions based on cash budgets, but you report to your citizens with accrual accounting, it's hard to reconcile the two. So the problem is look, you get IT systems, you set up the system, it gives you both sets of numbers. So it's not like you keep 2 ledgers. The IT system prepares the reports. But to actually prepare and go to Parliament with a cash budget, a parliamentarian will say, okay, Mike, I don't care about this. I really want to know how much we have to, what check do we have to write out? So it's more of changing the mindset. So a lot of parliamentarians, a lot of people who are not finance people don't understand accrual budgeting. So yes, Mike, that's fine, 500,000, but how much do I need to give the check for? And we need to change the mindset of the people in Parliament to say, not what is the check for, but what is the consumption? So accrual budgeting, cash budgeting, accrual accounting, cash accounting, you get a system like Oracle or SAP. That's the system does all these reports. If once you set it up, that's automatic. As to be able to understand and use those reports. So you don't keep 2 ledgers. The system, you put the data in once, and the system will give you the different reports you need, but it's how you use those reports. Does that make sense?
Thank you. There is another one. It is always known that the productivity of the individual in the public sector is much lower than of the individual in the private sector. So why do governments not work to raise productivity as in private sector, despite the fact that the potential in the public sector is higher than its counterpart in the private sector?
That's an excellent question. And my feeling is the reason why is, well, why is productivity higher? If I take my office in India, the reason why I have good productivity is I call in my manager to say, okay, how many reports were done yesterday? Oh, that person did 7. They should do 8. And I ask questions. Well, that information comes from a system like IPSAS and IFRS. So one thing we can tackle is by having these systems. You say, well, how come you're spending so much cost to tackle this process? So this is one dimension to tackle the government sector being less productive. This is not the only dimension. But at the end of the day, the numbers. If this is what you spent, doesn't make sense, you start to challenge it. As you challenge it, you push people to have accountability. If I take the US government, the Pentagon, which is our military, their budget is secret. Because the budget is secret, they waste a lot of money. The moment the budget is more transparent, you start to ask questions. Excuse me, can I ask you a question, please? Why did that screwdriver cost $300? Oh, it was specially made. Was that necessary to be specially made? The moment you open up to IPSAS, IFRS, some sort of transparency, the questions would push those organizations to start monitoring productivity because those numbers get rolled up into the salary cost. So it's not the only solution, but it's one of the solutions. And when the United States, when they were starting to get questions about, cost for certain things, then the idea was they would become hopefully more efficient.
Thank you. There is another case with another question about the case with the countries. What is the best reform approach or strategy to reach New Zealand results? Are there academic papers published on New Zealand case?
There's loads. It's interesting. If you call New Zealand, if the Minister of Finance gives the New Zealand, the Embassy of New Zealand a call and says we want to do a tour, New Zealand has said we don't want any more people to visit us because everybody keeps coming to visit them. There are lots of papers on this topic. First of all, my first question is, are you similar to New Zealand? No. New Zealand is a population of 6 million sheep and 3 million people. It's a population where the income disparity is very narrow. And it's also a situation where they have a strong accrual-based accounting. So what we can learn from them is they use people from the private sector. I'm not saying only private sector. I need private sector people, public sector people who are both smart to come together to come to a system. I don't just want people from the private sector, and I don't just want people from the public sector. I need to come together with both. So there are lots of things to learn from New Zealand. There are lots of reports out there. But you need to remember, is New Zealand your benchmark because you're not New Zealand? If you take Saudi Arabia, you're a mixture of, there are a lot of lower income people. There are a lot of employment initiatives by the government to help people out. So you want to make sure you have your right benchmark. But yes, there are tons of reports there about the biggest thing that goes wrong is we don't get the top people to buy in. So what happens is I'm the Minister of Finance, just take care of it. And they view it like a compliance issue. It's like if I tell my staff, just take care of those management reports. And if I don't look at them, it's just an academic exercise. But the moment you change the attitude. So the biggest success factor is, does the Minister of Finance, the person I'm talking about, does he actually buy into it? Does he ask questions about it? Does he believe it? Or does he say, yes, 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 just take care of it? That's the biggest success factor, because if the Minister of Finance, if it's a man or woman, whoever it is, takes personal responsibility and asks questions, it has a much higher chance of being a success if it's an admin thing. That's the biggest thing there.
Thank you, Mike. There is another question from Mr. Mohannad. I work in a semi-government entity that's funded by Ministry of Finance. We don't get our annual budget in cash. Instead, it gets reserved for our entity in the ministry system, and we use that reserved budget throughout the year. What's the correct way to book this reserved budget in our books according to IPSAS? For example, asset and revenue. Nothing since there is not exchange and actual receipt?
Okay, that's a very good question, Mohammed. There's something in the standard when you talk about non-exchange contract transactions. They talk about conditions and restrictions. So if I give you the money, and whatever money you don't spend, you have to give it back to me. You don't book it as revenue until you actually spend it. So therefore, revenue equals your expenditure. If it's a restriction, it says, I give you the money, but I don't ask for it back. So the key thing is, if the government says, whatever we don't approve, give back to us, it's deferred revenue until you meet the criteria to spend it the way they want. In that case, your revenue would always equal your expenses, and it would be all deferred revenue. Does that make sense, Mohammed? Mohammed
said yes.
I mean, okay, if any more questions, you can always email me, because that's that could be an hour discussion.
Okay, he will. There is another question from Azan. If there is an entity which is applying accrual-based system for a while, and later with a government restructure, it has been merged under another entity which applies cash-based system, what is the best approach to deal with in such case?
To get everybody to move to accrual-based. To get everybody to move to accrual-based. And this is a transition issue. Look, when you have different government organizations coming together, it's messy. So on a case by case, what I do when I have these kind of questions is I say, okay, what resources do we have? We might have, let's say we have a university, and they have highly, very good accounting department, and the data is there. And we have another organization that we merged, say a research department, that's a bit more messy. Well, sometimes it takes a couple of years to do it. So it's more about saying we take a step back, we want everybody to do accrual, but in the short term, what are the steps that we can do so we can do things properly? For example, when I moved to IPSAS, the first thing I say is, my approach is a bit different than the Big Four. I said, the first thing I want to do is let's get an asset tracking system. Before I even talk about IPSAS, it's an asset system, because the biggest thing is a system to keep track of assets bought and assets sold. Once you get the asset system, you get the numbers for your fixed assets. If you don't have the asset system and you do this on spreadsheets, you spend all this time and energy to get numbers, but without a system. So my approach is focus on the systems. Identify the systems you don't have, get the systems first. Who cares about IPSAS? Once you get the system sorted, then you implement IPSAS. And the biggest system, just like when I was working in Ghana, I said the most important thing is an asset register, an IPSAS compliant asset register. Once that is sorted, you have your fixed assets. You cannot do it on Excel. So it's case by case. You look at the scenario. Does that make sense, Azan?
Azan said yes. Thank you very much, Mike.
Great.
There is a question under IPSAS, which standards deal with accounting for financial instruments?
Yeah, there's IPSAS. Oh, I don't have the number memorized right now. Yeah, there is a specific IPSAS on that. I think it's IPSAS 32, but if you just hang on one second. There's a specific standard on that. I have the numbers memorized, but lately I'm just a little tired now. IPSAS. So if you go to the IPSAS, if you Google IPSAS website, IPSAS 28 is financial instruments. IPSAS 30 is the disclosure, and IPSAS 41. Okay, IPSAS 28. So IPSAS 28 is kind of like IAS 39. And it's being replaced by IPSAS 41, which is like IFRS 9. So what you're finding is there are two IPSAS standards, and we can choose the one we want. Generally, in the government sector, financial instruments are pretty easy because they don't have the complicated things like banks and stuff have. The question about restrictions and conditions, that's the standard on non-exchange transactions. So non-exchange transactions is IPSAS. I think it's IPSAS. IPSAS 23. IPSAS 23 is about non-exchange transactions, which covers conditions and restrictions, Mohammed.
Oh, perfect. So you're following the question? Okay, great. So
No, you keep reading them. I just saw that one there.
That's totally fine. There is a question from Ibrahim. I'm working in Abu Dhabi government entity and using buildings and land owned by government of Abu Dhabi. Shall we record those assets in our books? If yes, what is the value?
That's a difficult one. IPSAS, and it's hard to cover in this session because I did this over a 5-day course. The short answer is probably yes. IPSAS says an asset is a resource you control. If you control it, you record it. Now, this gets tricky. If I give you a building to use and I can move you around, you don't control the building. But if I give you a building that's purpose-built for your use, you control it. That's a tricky question that I spend a couple of hours on in class. So it could be yes, it could be no. If you email me a detailed situation, I can give you a voice clip with the response. That's not an easy question. That's a question that's going to cause a lot of discussion, arguments, and fights. Is there any more questions from you there,
yes,
Mimi?
There is one more question. Well, first of all, Mr. Asim says thank you for your time and the detailed explanation. And his question is, what is the best for non-profit, and is it allowed for asset reevaluation under IPSAS?
Just like IFRS, IPSAS allows assets to be reevaluated. Look, this is the mindset. Americans don't like to revalue assets. When I was speaking to my colleagues in the UK, they have a policy in the UK to revalue land and buildings because they say, we want to know what are the land and buildings worth. So when we look at the land and buildings, we can say, does it make sense to have so much land and buildings for this ministry? So there are different views on that. Americans generally don't like to revalue. And when I had this debate with my colleague in London, she said, well, Mike, listen, doesn't it make sense to know the value of the real estate? Then you can say, does it make sense to have that much real estate with that entity? So what I've always seen on revaluation, you don't revalue equipment, you don't revalue cars, you don't revalue machines. The debate is, should you revalue a land, real estate? And theoretically, you can revalue anything in IPSAS, it's property, plant, equipment. But in practice, the revaluation is usually only for real estate. Two perspectives, an American would say no, a British person would say yes. So, and I would say for a country like Saudi Arabia, before you get IPSAS, before you have IPSAS up to date and up to speed, the last thing you want to do is to be revaluing assets every year if your system's not fully functioning. There's so many things to get done. My recommendation for emerging markets is worry about asset revaluations of land and buildings later. There's so much work on the systems to get right. That's my experience.
Thank you very much, Mike.
Yeah, thank you.
I believe we will be closing the session here. Oh, sorry, I have one more question. I just want to make sure we don't miss anything. Under IPSAS, should we calculate the enhancement in our books for an asset even it was rented?
So what you're basically saying is I have a building and I fixed it up to get a better rent. So I would say generally yes. Again, I have to see these on a case. The devil's in the details. And whenever I do training, I always get cautious because people ask a one-line question, but when I actually have them in a live class in person, there's usually a huge analysis behind that. So on the surface, yes. Yes, you do. But it depends. I'll give you my email once more, and it's mikturner@gmail.com. And Mimi's email, which I think you have already because she should have sent it to you. So Mimi is great. Mimi takes care of all my course scheduling. But if you have any questions on technical questions, please email me. And Mimi's email is mimi dot, she has a big long name, BITRAAOVA. Did I spell it correct?
Yes.
So anything about if you want a course or anything about that sort of stuff, please contact Mimi. Any technical questions, what I normally do is I usually respond with a voice clip because I talk into my iPhone and I give the answer because it's too much to type up. I'm not a fast typer.
So I just want to mention, since there has been a question if we can share the slides of the presentation, I want to mention that the session has been recorded and it will be uploaded on our YouTube channel, Lioron channel. So I will share the link to the YouTube video with all of you. Then you can access the session at any time. And Mike, once again, I want to thank you. I want to mention to all participants that we have an upcoming session in IPSAS as well as in IFRS. So both of them are delivered by Mr. Mike, who you already know. So in case anyone is interested, you have my contact details to reach me. I will be more than happy to share with you a little bit more details about the upcoming programs. Unfortunately, this year, all of them are live virtual sessions, but we guarantee the same quality and the same effect as the classroom sessions. Now, I want to thank once again everyone for joining on our webinar today. I really hope that we have met and even exceeded the expectations and that you have gained as much value from this experience as possible. As I already told you, you will receive certificates of attendance soon, probably in a few hours, I believe. We really hope that you enjoyed the webinar today and that this will be actually a beginning on a fruitful cooperation for all of us. Thank you so much. Thank you very much, Mike. And I wish everyone a good evening.
Great. Thank you. Good night, everybody.